So financial leverage, it refers to the ability of a firm to use fixed financial charges. We're going to talk about what these fixed financial charges are. So the ability of a firm to use fixed financial charges to magnify the effects of changes in operating profit on the firm's earning per share. So the ability of a firm to use the fixed financial charges. Now, what are these fixed financial charges that we're talking about? Now, you remember that a firm usually has two major sources of funds where it can get its funds. It can either get it through debt or it can get it through selling shares, through equity. But it can also sell shares not only to the common stockholders, but it can also share it to sell shares to what we call the preferred stock. And so we have common stock and we have ordinary stock, or we have common stock and we have what we call preferred stock. So there are two sources of funds, which is acquiring debt, and the other one is selling shares. And you can sell it to the common, or these ones who have voting rights. So the common ones have voting rights. These ones have voting rights. Well, for the preferred stock, if you buy preferred stock, you have no voting rights. And if you buy fixed preferred stock, then you are given a fixed dividend. You get a fixed dividend. So you are guaranteed a fixed dividend, say at the end of the year. While with if you buy common stock, then you are not guaranteed. So you get paid last after all the other people have been taken care of. So you get paid last. So those are the two major forms of sources of funds for these companies. Now, if you know that these firms get their money from here, if you look at this, you find that for the preferred stock, they have a fixed dividend. And even for the debts, if you get a loan, there will be interest, which is also fixed. So those are the fixed financial charges we're talking about. The interest, so the fixed financial charges that a company has, fixed financial charges that we're talking about in this case of financial leverage, we have is the interest on loans, and two is the dividends that are paid to the preferred shareholders. Now, the ability of a company to use these fixed financial charges so as to improve the relationship between earning per share as a result of a change in the operating profit, or earning before interest and tax, is what we call operating profit. And therefore there is the formula for the percentage change in earning per share brought about by a percentage change in the operating profit. That would be the formula for the degree of operating profit. So the degree of financial leverage. So this is how we would get degree of financial leverage. But before we can look at that, I want us to get all the formulas we can for this. So how would we get all the formulas? We're going to get a simple income statement right here. So we can start with so in this column we put our sales. So let us say this our sales, that's our sales, and then from the sales you less variable costs, and you end up with when you sales minus variable costs, you get contribution. So you can put your contribution here, and then contribution minus fixed costs, you get what you call the earning before interest and tax. So the earning before interest and tax, which you can put there. And so that is the column for operating leverage. Now from here we now start financial leverage. So earning before interest and tax less interest. If this is your interest, then it will give you the earning before. It will give you, if you earning before interest and tax less interest, it will give you, when you subtract that, you get the earning before tax right there. So earning before tax, when you less tax, you'll end up with the earning after tax. Earning after tax. So this will be the earning after tax. Now the earning after tax, when you less the preferred dividend we've just talked about, when you less the preference, dividends, you end up with the earnings that are available. This will be the earnings available to the preferred to the common, earnings available to the common shareholders only. So this will be the earnings once you get this. So this will be the earnings which are available to the common shareholders only. Now if you want to get the earning per share, earning per share is going to be given by the earnings which are available. This figure, the last figure we got, earnings available to the common shareholders only, divide that by the number of common shares that you have. So divide that by the number of common shares that you have, and there you'll get your earning per share. So that is how we calculate our earnings per share. So you know how to calculate earning per share, and you know how to calculate the earning before interest and tax. Earning before interest and tax was got here by saying sales minus variable costs, and you get contributions, then minus fixed costs. So it's you can either write it like that, or you can write it as contribution minus fixed costs. So those are the two most important formulas that we need to know, and from this we can end up with our degree of operating leverage. since we know these two formulas, we can now calculate the degree of financial leverage. So we can calculate the degree of financial leverage as the percentage change in the earning per share brought about by the percentage change in the earning before interest and tax. Okay, so that is all you need to calculate. So if they give you a question, all you have to do is substitute, and so we shall look at an example on how to do this, but those are the formulas that you have. So using this table, we can clearly follow and find out how you arrive at all the answers. Okay.